Bitcoin, BTC, will likely undergo significant changes and trends by 2025. The crypto market is still highly volatile, and predictions may vary, but let's take a look at some key factors that could influence Bitcoin's price in 2025. 1. Price predictions. Bitcoin's price could reach very high or low levels in the coming years. One of the most discussed predictions is that Bitcoin could reach $100,000 or more in 2025. This is possible due to the growing global interest in cryptocurrency, institutional investments, and more adoption by financial institutions. 2. Supply and demand. With Bitcoin's limited supply, only 21 million BTC in total, increased demand could drive its price higher. In a market where demand is high, the price of BTC is likely to rise. As mining becomes more difficult and energy-efficient technologies develop, the price of Bitcoin could continue to rise in the future. 3. Global regulations. Crypto regulations and the approach of governments towards this sector could have a significant impact on BTC's price. The legal status of Bitcoin, how different countries address it, regulatory changes, and taxation policies could shape Bitcoin's future. 4. Mining technology developments. The development of new Bitcoin mining technologies and the use of energy-efficient devices could help make mining more sustainable. Changes in mining technologies and advancements in the field could positively impact Bitcoin's future. 5. Crypto adoption and use. Increased adoption of Bitcoin and the growth of payment platforms that support Bitcoin could make it more practical for everyday use. If Bitcoin becomes more widely accepted for transactions and payments, it could lead to price increases. Bitcoin 2025 price estimate. Predicting Bitcoin's price in 2025 is highly speculative due to the volatile nature of the cryptocurrency market, but there are some reasonable scenarios based on current trends and factors. Here are some possible price estimates for Bitcoin in 2025. Optimistic scenario: $100,000 plus USD. Many experts predict that Bitcoin's price could reach $100,000 or higher by 2025. This is based on factors like the increasing adoption of cryptocurrencies, institutional investments, and growing interest in digital assets as a store of value. If Bitcoin continues to gain mainstream acceptance, especially in terms of being used for payments and hedging against inflation, it could easily surpass this threshold. Moderate scenario: $50,000 to $75,000 US. In this scenario, Bitcoin may not see the extreme growth some predict, but will still experience a significant increase in value. Bitcoin could stabilize and maintain its position as a leading digital asset, attracting more institutional investors and long-term holders, which would drive its price into this range. 1. The mystery of Satoshi Nakamoto. The creator of Bitcoin, Satoshi Nakamoto, remains anonymous to this day. Satoshi could be a single person or a group of people. In fact, Satoshi left a hidden message in the first Bitcoin block, Genesis block, the times 03/Jan/2009 Chancellor on brink of second bailout for banks. This message is seen as a comment on the economic situation of the time, particularly the banking crisis. 2. Bitcoin and pizza. The first ever Bitcoin transaction took place in 2010 when 10,000 BTC was exchanged for 2 pizzas. At the time, 10,000 BTC was worth only $25. However, based on today's value, those pizzas would be worth millions of dollars. This is often referred to as the most expensive pizza ever. 3. Bitcoin security. Bitcoin's blockchain technology is so secure that it is one of the most computationally intensive networks in the world. The mining process uses cryptographic security so powerful that even a 51% attack would be extremely difficult and costly to execute. 4. Bitcoin's limited supply. There will only ever be 21 million Bitcoins. This limited supply sets Bitcoin apart from other currencies, as many other currencies are subject to inflation. Bitcoin's finite supply, along with events like halving, where mining rewards are reduced, could help its price rise over time. 5. Bitcoin's energy usage. The process of Bitcoin mining consumes a huge amount of energy. Currently, Bitcoin mining consumes more electricity than some countries, which has sparked discussions about its environmental impact. 6. Bitcoin's legal status. Many countries do not recognize Bitcoin as a legal tender, but El Salvador became the first country in September 2021 to officially adopt Bitcoin as legal tender. This is a significant step in the global acceptance of Bitcoin. 7. Bitcoin and the dark web. Bitcoin gained initial recognition for its use on the dark web or black market due to its ability to provide anonymity. It was initially used for illegal transactions, but over time, Bitcoin became more widely recognized as a legitimate investment and trading asset. 8. Bitcoin and digital ownership. Bitcoin's blockchain technology not only serves as a currency, but also as a form of digital ownership. Every transaction on the Bitcoin network is recorded and stored in an immutable way, ensuring that past transactions cannot be altered. This feature makes blockchain technology useful not just in finance, but across various industries. 9. Bitcoin compared to gold. Some people refer to Bitcoin as digital gold because, like gold, Bitcoin has a fixed supply. This means its value won't drop to zero due to its limited supply. Over time, Bitcoin's price could approach that of gold as it continues to be seen as a store of value. 10. Satoshi's coins. It's estimated that Satoshi Nakamoto holds about 1 million Bitcoin. These coins have never been moved or spent, meaning they remain frozen in his wallet. If these Bitcoins were ever moved or sold, it could significantly impact the price. The crypto world, a comprehensive overview. The crypto world is a rapidly evolving and dynamic field, primarily related to cryptocurrencies and blockchain technology. However, it goes beyond these topics, encompassing areas such as NFTs, non-fungible tokens, DeFi, decentralized finance, smart contracts, and many other innovative developments. Cryptocurrencies. Cryptocurrencies are digital or electronic currencies that are decentralized, meaning they are not controlled by any bank or government. Bitcoin, BTC, was the first cryptocurrency created in 2009 by Satoshi Nakamoto. Since then, hundreds of other cryptocurrencies have emerged. Key features of cryptocurrencies. Decentralization. Cryptocurrencies are not controlled by governments or banks. Blockchain technology. Cryptocurrencies operate on a blockchain system, ensuring secure and transparent recording of transactions. Security. Cryptocurrencies are protected by powerful cryptographic methods, making them difficult to manipulate. Anonymity. Some cryptocurrencies provide a high level of anonymity in transactions, ensuring privacy. Popular cryptocurrencies. Bitcoin, BTC, the first and most well-known cryptocurrency. It is still the largest by market capitalization. Ethereum, ETH, the second largest cryptocurrency, which not only serves as a currency, but also as a platform for smart contracts and decentralized applications, dApps. Binance Coin, BNB, the native token of the Binance Exchange. Cardano, ADA, Solana, SOL, Ripple, XRP, Polkadot, and others are also notable cryptocurrencies.